My name is Tim, and today I want to discuss about how to trade using the Fibonacci retracement and extension. And when you're looking about Fibonacci retracement and extension, this becomes, or it is, a very powerful strategy for both identifying potential entries and exits in the financial market. So you can apply them in any financial market, whether Forex, stocks. It works well, perfectly. Professional traders use Fibonacci levels in conjunction with other technical analysis tools, which increases their probabilities of success. So in this video, I'm going to show you how we apply this Fibonacci. And this is just the normal Fibonacci that you get in your trading view without doing any setups, all right? Without doing any interferences with the style or the coordinates. So when you pick it from there, you can see this is the Fibonacci that we have. So this Fibonacci contains what we call the retracement levels, and also it contains the extension levels. So this is in terms of decimals, but I want to put these coordinates in terms of in terms of percentage, so that it can be easier to understand. So when you want to change in terms of percentage, so this is where you come and change. All right, here you come to the labels, then you put percents. All right, and then now it will show you the percentage. All right, so these are the percentage, right? Or these are the percentage form, or the forms, how it looks like in terms of percentage. So if you want to change it in terms of decimals, you come again here, you change in terms of values. And when you change it in terms of values, that is how it's going to appear. All right. So in this scenario, what you want to do now, let's change it back to percentage so that we can work with the percentages. And with the percentages, basically, we want to look at it, this one starting from 0. So this one needs to be 0, right? So at least we can make that adjustment. So that one needs to be 0. So then now we can change it in terms of percentage. So we come here, we change into percentage. All right. So that's how it looks like. All right. So now, when you want to use this Fibonacci, the first thing that you need to understand is what you're calling the retracement levels, right? So when you're talking about the retracement levels, so what are the retracement levels for the Fibonacci? So here we are talking about 23.6%. That's a retracement level. We are talking about 38.2%. The next retracement level that we have is the 50% retracement level, which is actually a very powerful retracement level. Then we also have the 61.8%, which is a retracement level. And finally, we have 78.6%. So these are the retracement levels in the Fibonacci that we have. All right. And you can see them here. So we have the 23.6, we have the 38.2, we have 50%, 61.80, and 78.60. So those are the retracement levels. So these are just horizontal lines that indicate where support and resistance are likely to occur during retracement of a larger trend. All right. So if we are looking at it that way, then the next thing that you need to understand is the extension, right? Extension levels. So the extension levels, basically these are used to predict where the price might go after the retracement or a breakout. So extension levels are the levels that we use in terms of take profit. So we have 61.8, which becomes an extension level. We have 100%, which becomes an extension level. 127.2%, which is also an extension level. 161.8%, and also we have 261.8 5%. So these are extension levels. So for you to be able to understand this, when you're talking about the retracement levels, these are the levels that you want to see the price retrace to so that you can have your entry, whether you are buying or you are selling. The extension levels, these are the levels that you need to take profits, all right? These are the levels that you are looking in terms of taking your profits. So how does one use the Fibonacci? So Fibonacci retracements, like I've said, they are very most effective, especially in a trending market, right? Like you can see this market, it has been a trending market. So this is the gold market, all right? This is the gold market. And here the market has been trending. Okay, the market has been trending. So allow me to save this template as the normal normal fib. All right, so because I did a few adjustments, so this is the normal Fibonacci. So I will save it like that. So the first thing when you're using Fibonacci, you need to identify a trending market. Like you can see, this is a market that has been pushing in an upward trajectory, right? It has been pushing in an upward trajectory. So the first thing is to identify a trend, determine whether the market is in an uptrend or is in a downtrend. So in an uptrend, like this market here, you want to draw the Fibonacci retracement from the swing low to the swing high. Right. So if we look at this kind of a market, let's say this is the swing low that we have here, and this is the swing high before the market retracing. So this is how you want to put it, like that. All right. So 0 being around this particular level, all right, there. And then we have 100% being to these particular levels, all right? So that is a trending market, and that's how we are positioning our Fibonacci. So how do we take trades now from this kind of a setup? So what we do is that after the price pushes up, all right, after the price pushes up to this level, remember this is where the price began from. This is the swing low, and this is the swing high that we have at that particular point. That's where we have our swing high. So now we want to look for retracements. And one thing that I can assure you, the first thing that you know, we always buy at a discount and we sell at a premium. So between 0 and 100, so if you want to look for buying opportunities, we are not looking at the 61, neither are we looking anything 78.6, 61.8. No, here we want to buy at discount. So it's either 50% level or somewhere below 50%, all right, maybe 50%. Because if you look at the discount, all right, so this is the discount and premium. So if you look at the discount and premium, so this tells you that this particular level, so we can probably mark this. So that's where we have our discount, all right? That's where we have our 50% level. So anything above this point, it's what we call the premium. Anything below 50% is what we are calling the discount. All right, so we want to look for buying opportunities here now in the discount. So let's go back to our normal Fibonacci. All right, so let's delete this and go back to our normal fibs. So this is the normal fib. All right, so like we had drawn there. So now the key thing, another factor that you need to understand is to combine these Fibonacci retracement levels with key points of interest. Maybe you can look at where we have support levels. Maybe you can look at where we have, especially for buying, here we want to look at support levels. If you're selling, we want to look at where we have resistant levels. If we are buying, we also want to look at where we have demand levels. We also want to look at where we have maybe any key point of interest, either order blocks, breaker blocks, mitigation block, whichever, because it's not just because how do we tell? there's no another way to tell or to know exactly this is where the price will reach and react, because if you look at the 38.2% is a key level of retracement. So someone might be buying here, but you can see the price pulled back all the way to this point before going, right? Though it did not hit our stop loss, because our stop loss needs to be slightly below the Fibonacci 0.0 level, somewhere slightly below this, all right, below the swing low. So what you do, you look at key level. So when you look at this particular point here, what we have here is a key level. You can see we had this last candle, so we can see the price pushed up, took out the liquidities or created a BMS or a BOS, however you call it. So after retracing, then it comes back again to this particular level here. So this is where we have a block or an order block point of interest, all right? So we can mark it like that. So the entire of this last candle, the sell candle which gave us the low, so you can mark that, and that is where we have or that's where I could have waited for this trade so that now I can buy. And you can see after that the trade pushed up, and we are saying in terms of extension levels for our take profit, we are looking at the price coming to this particular level, the high that it came to. So this is actually the level that I consider, even though the 61.8% is also an extension level that you can consider taking maybe partial profit. Then when it comes here, you can take also partial profit. And if you want to swing it, you can see the price is pushing to the next extension level, which has already been achieved. That is the 61.80. All right. So here we are anticipating this price to come to around 21.660. That is around 27.24. If the price is gonna be bullish, you anticipate the price to come to around 27.24. So that is the next extension level that we have, 261.80%. All right. So that was a very nice setup. So you can see used the Fibonacci, drawed from the swing low to the swing high because we are in an uptrend, and therefore I have been patient to wait for the price to come to a key point of interest, right? To a key point of interest, so that now I can consider buying the market. All right. So let's look at another scenario, maybe in a downtrend market. Right. So let's look at another scenario, maybe in a downtrend market. So let's look at this point. So this point, you can see the market has been in a downtrend, right? So after the price created a change of character around this particular point, so it retraced. So when you are looking at it in a downtrend, what we want to do in a downtrend, we want to draw our Fibonacci from the swing high to the swing low. So this is our swing high, and this is our swing low before the price retraced. So you take your Fibonacci, you draw from the swing swing high, all right, from the swing high, all right, the swing low. So 0 needs to be at the swing high, and 100% needs to be at the swing low. All right, needs to be there at the swing low. So like you can see, we said that an extension level begins the retracement levels. We have 23.6, we have 38.2, we have 50, we have 61.8, and we have 78.6. So what you can see in this price, we have already identified it's a downtrend. So we have drawn from the swing high to the swing low. So now, therefore, we are looking for the retracement. Remember, this is the push for the retracement, all right? So the price comes to around between 50% and 38.20%. So why this level? Because in this level, we have the order block, all right? We have that order block that the price created, the last buy candle, all right? You can see this, the last buy candle, that we have here before the price came down. So you can see the price retraced to that level, basically, and then it started selling. So you can see how we are timing our entries. We are not only looking for the retracement levels, but we want these retracement levels to be in key points of interest, either an order block, either a resistance zone, etc., etc. So that's how you increase your probabilities. All right. So now you take the trade. You are targeting 61. Which is very close, so I will not suggest that you target 61. So most of the time I even don't target 61.8%. So if I take this kind of a trade, I usually target the 100% where we had this low, because the price has a tendency to come and take out this liquidity. So this 100% here is almost 99 or 98% that the market will come to this level. All right. And then now you can take partials and continue holding. So you can see the price came to 161.80. Then it came to around the 261.80 before now it started pushing up. All right. Before the retracement. Okay. So one thing that I can advise you, actually don't target so much. All right. Don't target so much, not unless you're using the currency pair. Remember, this is gold. So again, even if it's currency pairs, depending on the time frame, remember this is the daily time frame. So don't target so much. So for me, 100%, I take partials, and then I put stop loss in break even, or I put stop loss in profits, and then now or I trail my stop loss, and therefore now I can wait for this 161.80%. All right, I'll be satisfied if the market gives me to that level. All right, so in a summary, how to use Fibonacci. So number one, understand the Fibonacci levels, know which are the retracement levels and which are the extension levels. So the retracement levels are 23.61. All right. The retracement levels, we have 23.6%. We have 38.2%. And then we have 61.80%, and we have 78.6%. So these retracement levels, these are the levels that we want to see the price retrace to, so that we can take our entry. And I have said for you to be able to have high probability entries, you need to combine with key levels. These retracement levels, around those retracement levels, look for key levels, like maybe order blocks, like maybe support and resistance, or whichever key levels that you look at. All right. Though I'll be doing another video in terms of explaining all the key levels that we have in the market that you might want to look at. So then after that, you also understand the extension levels. So because the extension levels will act as your take profit levels, all right? And the extension levels, you have talked about 61.8%, 100%, 127.2%, 161.8%, and also 261.8%. So after that, now you need to identify the trend. So like in this scenario here, this is a downtrend, all right? So we have identified this is a downtrend. The price having taken out, created a change of character around this particular point. You can see this is the swing low and the swing high. So the price came out and closed below that, so signifying a change of trend. And therefore now we mark in a downtrend, we mark from the swing low, swing high to the swing low. All right, these are swing high, these are swing low. So 0.0% at the swing high and 100% at the swing low. All right, and therefore now we will look at the extension levels, and also we combine with key points of interest. All right, so I have looked at these extension levels. The price retraced to 61.80%. It actually retraced to, first of all, 78.6. So I did not take a trade. Here you don't take a trade also at 61 because you don't have any key level. So the only key level that we have is this last buy candle, which creates now an order block. And you can see once we mark that, that is where the price came to. So we take our trade here comfortably. We have our stop loss slightly below this particular point. All right. So this is how our setup can look like. All right. This is how our setup looks like. So we have our stop loss slightly above that point, and therefore we can target even the 161%. So remember, this is a risk to reward ratio of 1:2. So always shoot for a risk to reward ratio of 1:2 or even more. But you can see this trade actually gave us about 1:3, right? It gave us a risk to reward ratio of 1:3. So a very nice, nice setup, right? A very nice setup. So if it's an uptrend, like we have said, or if the market is in an uptrend, all right, if the market is in an uptrend, so what you need to do is you identify, after identifying the trend, so you can see this is already an uptrend, so you identify the swing low, all right, so you draw from the swing low. So this was the swing low, and then you draw all the way to the swing high. So 100% needs to be at the swing high, and 0% needs to be at the swing low. All right. So what you do here is now you, after drawing this, you look at the extension levels. All right. So all these 61, 50, 38.2, 23, the extension levels. But where do we have a key point? So the key point that we have is this last sell candle that looks like a doji. All right, that's where we have the order block. So, and the reason why the market retraces all the way to this particular point for you to have the trade. So that's how you do it, basically to increase your probability. So you have your entry there, you have your stop loss slightly there, and then now you are shooting for a risk to reward ratio of 1:2. All right, and you can see this one actually gave even more. Even if you're targeting to this point, this is a risk to reward ratio of 1:4.29. So the big question is, does Fibonacci retracements and extension work in all time frames? I use the daily time frame. Yes. Price is fractal, so every strategy works in all the time frames. The key difference, or the difference now in the time frames, is the number of pips that you're targeting, all your target. So in higher time frames, of course, there'll be high rewards. In lower time frames, you are looking at maybe less number of pips. All right, but what you need to understand is that price is fractal, so they work on all time frames. So what I want you to do is you can backtest using them even in the lower time frames, 4 hour, 1 hour, 15 minutes. Just backtest, and in case you have any difficulties, be sure to comment in this video. All right, and I'll be able to, I know what your issues or the difficulties are, and I'll be able to assist you. So thank you very much. The next video, I'm going to talk about the classic ICT Fibonacci, because this is the normal Fibonacci, again, which is very effective, but also for the ICT funds, those that trade ICT smart money concept, I'll be showing you how to use the ICT Fibonacci. So until then, keep safe and see you.